The Dow finishing yesterday at a record close. It's 9th of the year. Join us now, Jihan Bowes-Little, co-founder and managing partner at Bracket Capital, and our own Mike Santoli is with us as well. Jihan, your Bracket Capital, your goal was to take international money and connect that with some technology stalwarts out in Silicon Valley and upstarts. Is that basically it?
Yeah, we focus on growth in late-stage private companies, right? So the likes of the Ubers, the WeWork, SpaceX, et cetera. That's kind of the cohort that we invest in. Some of those names in particular, but that's where we focus our investors' capital.
In the last 3 months, what do you make of what's happened, and how does it affect whether your business is even, I guess some things are even more attractive to you?
Yeah, absolutely. Yeah, I mean, we have a long volatility strategy. We have a lot of tactical allocation where we're also looking to invest in these companies on the secondary market, buying from early employees and early investors. So when volatility increases and uncertainty increases, and certainly we've seen that in the last few months, it presents a lot of interesting entry points for us.
There must be a lot of stuff you've seen in the wake of WeWork.
Absolutely. Yeah, we weren't an investor there, but broadly speaking, I think it's
all of a sudden employees are like, hold on a second,
exactly.
Make me liquid.
Yeah, it's made that conversation a lot more interesting, right? I think a lot of early employees and investors thought they were kind of investing in and joining companies that might go public in 5 years, and the average is closer to 10 to 12 now. So within that, you start to see a lot of interest to kind of access liquidity earlier.
They think the private space got out of whack valuation-wise. Do new highs in the public markets start to bring confidence back to the private markets, or does it not matter?
It's been a little bit bifurcated. I mean, obviously, you could go back to 2014 and say the private markets was where really all the aggressiveness, the growth was happening. And so it's almost just that they're not in sync in terms of when we're hitting new highs for valuation. I think what's interesting about the public markets is they've kind of walled off what they would perceive as being excessive valuations in new IPOs, or they've just not received them very well. But if you look at the direct listing of Slack, I mean, that's...
If we get ebullient here in the public market, all these new highs, does the IPO window reopen?
I think it's still kind of open. It's just a matter of being a little more selective. And by the way, I don't think new highs in themselves, the way we're ratcheting to new highs, tells you that we're ebullient necessarily.
No, but if it gets there.
If we get there, yeah, I do think
3,500 on the S&P, people are going to start thinking. I mean, this is still not the most loved market, is it, Farley, that you see? I mean, there's still...
We had a guest on this morning saying everything's great.
Yeah, he did, but he's rare.
All around the world.
He's rare.
Jihan, there was this mania that overtook Silicon Valley that the public markets are terrible and we can do everything better than public market investors.
Right.
I think that's been proved a little bit silly in most cases. I look at a number of the companies you've invested in, and I would put them in that cadre. Airbnb, Lyft, you mentioned Uber, Palantir. These are companies that have developed business models. They're ready to go public, in many cases cash flow positive, and they've chosen not to go public, and I think it has harmed many of them. Is that a threat to your business model?
It really, like all things, depends on entry points as well, right? So we're not investing kind of pre-IPO, post the announcement. We're typically 3 to 5 years out. So, if things have gone well, we're typically deep in the money by the time that conversation's even starting to happen. But it is true, I think that there's this new asset class. It's somewhere in between venture and public markets, right? It's these late-stage private companies that would have been public in any other sort of space and time. And so, we're kind of in and out, trading a little bit more actively in the secondary market on some of these names. It's a little bit less of a kind of a long-term only buy and hold strategy. So certainly for the existing portfolio, volatility can affect it negatively. But as we said, it presents a lot of interesting entry points as well. And so we've actually been more active since the uncertainty increased over the last 3 to 6 months.
You like Lyft better than Uber?
We did.
You were like...
Did. You change your mind?
Yeah, we exited a while ago.
You did?
But for a time we...
But you had left... The impossible foods phenomenon is going to continue.
Absolutely, yeah. I think
deal.
That's a theme, right? I mean, I think impossible foods and even its competitors. Sitting out in California, you can very clearly see that this is a very, very strong and growing macro trend. That's an investment that we like a lot.
What about Coinbase?
Yeah, how about crypto?
Yeah, I thought you'd ask.
Huh?
Yeah, we're still an investor in Coinbase. We're an investor actually in a variety of kind of picks and shovels, so to speak, in and around the crypto universe. We don't necessarily track it day to day in the same way that kind of, Bitcoin investors would per se. These are intermediate to long-term holds for us, but we're very bullish on that ecosystem and we continue to hold.
If it went away, it seems like Coinbase would go away.
That's right. It's definitely levered, right? It's a highly correlated bet.
Say it's not going away.
I don't think it's going away.
And if it works, Coinbase is a huge winner.
That's right.
It's well run. They have focused on crypto. They've made their bet.
That's right.